The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
Welcome to another episode of the Canadian Mortgage Show. This is episode 34. Alex Pang here alongside my co-host Alex Shanks.
That's awesome, Alex. I was going to tell you, if you made me do the intro, I don't think I would remember what episode we're on. Now, I'm super excited here. I'd like to introduce Matt Backett to the show here today. Now, Matt Backett is a wealth advisor at Coastwood Private Wealth. Now, he has a career in wealth management that spans nearly 2 decades. His expertise and experience provide a lot of certainty in an uncertain world. Now, Matt likes to empower his clients so that they can make those strong financial decisions. And now he's also quoted in local and national news for outstanding financial planning and advice. Now we also get to say that he's on the Canadian Mortgage Show. So thanks for being here, Matt.
Thanks for having me, Alex. And Alex, really appreciate it.
Yeah, we're excited. Like we kind of talked about is this, we want to talk about some financial stuff, but really we just want to have a conversation. And it's always great to get each person's overview. Obviously, Alex and myself, Alex, we're mainly in the real estate world, which is a great thing, but I find it's not the end all. And I know that's how like me and you connected there, Matt, is I like how you work is you let your clients show like, hey, you might be too heavily invested in the stocks right now. Like we need to look elsewhere, which I just like, I think that shows how you're not thinking of just yourself. We know obviously if you just did stocks, that's more money in your pocket, but that's not what's best for the client.
It's a great point, and exactly, and that's why my title is Wealth Advisor Portfolio Manager, and it's because we're looking at your whole plan regarding everything relating to finances. And it's so important to kind of look at, when you're changing levers, what's going to work well, short term, long term, and having a plan established with that and starting with that first is kind of how we really engage our clients so they can make great decisions.
Totally. Now, there's lots of volatility in the market. Tell us how's that been for your clients and like what you're seeing right now.
Yeah, I think when we talk about volatility, I always talk about like risk, or I always associate it with the roller coaster ride. And volatility or risk really can be an opportunity, but it also can be a challenge. And I'm seeing it, I think we're all seeing it in real estate right now. Like if we just looked at the last quarter, there was double-digit sales drops in real estate in Canada, and that was due to economic uncertainty, and that was related to Donald Trump's plans and tariffs down in the U.S. As it relates a little bit more specifically with my role, it has also affected world markets and the stock market, and so volatility is everywhere. It's always present. It just sometimes spikes. Yep. Right now, it had spiked. It has definitely subsided as of late, and when I say as of late, last 2-3 weeks, which has been nice to have a little bit of a break. What when I always call uncertainty, we'll talk a little bit more about what that means, but like clients crave certainty, and in an uncertain world, that sometimes has a bit of a challenge in our world, and sometimes it's about just kind of keeping an eye on the long term and not reacting to those short term decisions or things that we see on the news.
Yeah, I mean, we obviously all saw stocks down. That one day was it like 18%? I can't remember the exact number, but it was like a significant amount.
Yeah, so like from peak to trough in the U.S. markets, they almost touched what they would call bear market territory, which would be near 20%. And you are correct in that kind of 18-19% range in a very short period of time. And so we have seen that subside, and the level of recovery is approximately 50 to 60% at this point. We're not out of the woods yet.
Matt, so have you, basically in our world and probably in your world as well, have you felt that you've been doing a lot of babysitting or like putting out fires when you're handling a lot of panic calls from clients and really there to kind of settle the storm kind of thing?
Yeah, it's yeah, and like you call it, I call it hand holding, and it's just because we're alongside our clients, we're invested the same as our clients too, and so that alignment is that I kind of I know what you're feeling, and again I see it a little bit more right now. Now in terms of panic, I haven't seen that, and I think it's because of a few factors, that clients have a plan, at least our clients have a plan. We have a plan B, a plan C,
Yeah.
right? And it's always looking at, okay, what are the potentials for A, B, and C, and make sure that we're covered in those scenarios so that they can make those good decisions in times of strife. We also talk about it ahead of time so that, they know what's coming. It's maybe not so much what it is, but how we will react in scenarios like that. And I think that's what, if you can get ahead of that potential issue, and in your world, it might be like a spike in interest rates, or a housing downturn in value. Those things are important to think ahead. What would you do in those scenarios, and talk it out with a client, because
Um,
you're going to see how they will react, and maybe coach them on what you could do in those scenarios.
Yeah, it's talking, especially when people are buying their first home. Like it's explained to them, like, is this for an investment or is it for your life? Like really understanding their why. And that's where, for one, I know the banks don't hit that. They're just there to say, hey, go buy the house. And that's where telling them like, hey, like, yes, let's pretend that this loses 100,000 in value. Is it still where you want your family to be? Like that's really where it comes down to. Obviously, none of us want that to happen. But I bought a house and I was like, hey, the value is going to go down. But I was comfortable with that because I looked at my budget.
Yeah, a great example this morning. I was talking to one of my clients, and he's thinking ahead about what he's going to try and help his son get into real estate, and he's going away for university. So he's like, "Do we buy a piece of real estate for 4 or 5 years, and then sell it afterwards?" And I'm like, "Well, let's think of the potentials of what could happen."
Yeah.
And what could happen is the value's not at a point where it's sellable, or you'd lose money. If not, then we have to hold that piece of property for a longer period of time. And I think we have to be prepared in any kind of real estate deal. There's no get rich quick. It's grow your wealth slowly over time.
Yeah, I mean, I feel like, especially like on the island in Vancouver, that's what a lot of families did when their kid was going to go to university. They would buy that condo in downtown Victoria, but it was at a low price and it was cheaper than renting. And so like the numbers were just like super easy. Well, hey, why would you not own something? Where now like I sit with clients and they want that same thing. And I crunch the numbers. I'm like, you're going to be negative, let's say cash flow, $800 a month. Now, if you want to have this long term, hey, that could still benefit you. But like if you're just doing this thinking you're going to get rich on it, we might want to reassess this.
That's a great point. And I think real estate has been a great investment over a long period of time. And our generation really hasn't seen a whole lot of moments in local real estate where we've had dips. I mean, '09 was probably the one that I can think of. And more recently, I just think we've been kind of flat. So we really haven't seen catastrophic issues in real estate, unlike our partners down south in the US. They have. And so that is something to kind of look at. But people love real estate. They love a tangible asset. And it is a great way to grow your wealth because you're using a mortgage, you're using some leverage. You could have somebody pay for a portion of that as a renter. There's lots of options in it. And I think that's, you have to look at those options as part of a plan.
So Matt, sorry, Matt, something I've noticed in the last couple of years, you're right. Canadians love real estate. It's just right. And, it's worked the last, 15, 20 years where money was cheap to borrow, and it obviously probably contributed to the whole housing crisis with immigration and all that. So that's a whole larger issue. In the last couple of years, real estate hasn't been that great for investment because the math ain't mathing with interest rates going up, rents coming down, and all that stuff. Have you seen people shifting their focus from real estate to more on the investment side, or they've just pulled back from real estate and be like, I'm just going to hang on to the cash for until real estate becomes better again? Like, what have you seen in that rate?
Yeah, I think in the last 3 years, I have seen a trend of my clients selling their rental properties, and I think some of that's because of like age, their own age. Some of it's the age of the property, knowing that there's going to be more and more maintenance, and some of them it's just we just want to be a bit more liquid. So that has been a real trend. More recently, I have definitely seen a lot of my clients sell their U.S. properties. And it's just, we're just going to repatriate those dollars back to Canada. And we're probably not going to go down to the U.S. as much. And we're seeing that as a big trend. But longer term, 3 years, I have seen more clients sell their rental properties. I've only seen, a handful of clients downsize. And that's a continuing trend that we're seeing across Canada, is the downsize to your typical rancher.
And now talking about obviously like what's happening in the US and stuff, I find right now there's a lot of this podcast it's going to come out after the election. We are going to know who's either still staying as prime minister, who's going to be the new one. Like I find people are hesitant right now for that. And like what are like, are you seeing any people coming to you wondering like what do we think, like is liberals better for them or is conservatives better for them? Like that's where people want answers, but it's like there is nothing that we can guarantee you.
No. And it comes back to that uncertainty thing. I think really that's the factor, regardless of what party actually gets in and wins. There's current policy uncertainty.
Yeah.
I think our neighbors to the south have added to that uncertainty and confidence. So we're seeing that within the investment world, within the business world, within the real estate world. So I do think that will subside a little bit, once we find out who gets in, because then there's going to be a path. And that's what I'm hoping for as a Canadian. I am hoping for a path to kind of see like what it is that we are going to, like, how are we going to become a healthy nation? Yeah. That's what I'm really excited for. And I think that's also what kind of brings people together too. Once an election is done, we know the outcome. The certainty is there. What's the path forward? And I always kind of, it's a week away from that decision day. And I'm excited to see that come to fruition.
Speaking of the whole uncertainty in the States, have you, some people are very political and very like, hey, let's cut ourselves away from the US. Has there been a segment of your clients that say like, I want to sell it, like, I don't want to invest in the US anymore, pull everything out, even though my returns might be greater in the US, like, let's bring it back to Canada or invest abroad? Like, have you seen any of that?
I've had two questions of that. And that has been a serious challenge, because I think it is certainly something that what we always kind of have to look at is as the past, and the past doesn't necessarily have to dictate our future, just like anything, right? So we have had conversations about that. What we do by getting out of the US as that prime example is we do lose out on a lot of diversification. We do lose out on currently the largest consumer in the world. We also lose out on a significant portion of technology and innovation. That is what the U.S. has really grown into in the last little while, less in the industrial manufacturing side. And I think that's an important thing to, whether it's logical or irrational thinking. When people are emotional, we have to bring back and understand that emotion and go, okay, I get what you're saying, but let's just look at this from a plan. Let's look at this from how that will affect your investments going forward. And if you're okay with that, then let's proceed. I'm not going to say you're wrong, because no one knows the future. No one can predict that.
Yeah. And that's where, I find a lot of people have just been jumping on things because of that fear and everything. And that's where I always just try and sit down. And that's where I love real estate, because it's a more, I can control people's emotions easier, where I think I personally would be pretty stressed in more of in the investment world, because I'd be freaking out for them. Like, oh man, they're going to call me that the stocks are down 20%. Where it's a lot easier for us to control in the investment world on the real estate side of like, hey, we already knew that this was going to happen. Your number was going to go down. Again, a lot of that wasn't discussed in 2020, 2021 for people. People bought investment properties because they had a rate at 1.5% and the numbers work there. I don't know why no one ever sat with them and said, hey, like, this is not the norm for interest rates. It's a great time right now, but like, we're going to go back up. If your numbers don't work at higher, why are we buying this?
Right. Yeah. And I think, the implementation of like policies and steps at the levels, within financial institutions in Canada, they implemented stress tests, but I don't think there was a conversation beyond just we're going to test this and really talk about what does this actually look like if your mortgage is 5 or 6%, and what would it look like if we've lost a renter for 2 months because they went and found a property that might be more marketable and maybe it's just better, like even if it's a higher cost, right?
Yeah, and that's, I mean, rents all across Canada, they're just dropping now, and that's where a lot of people, like when I help people, and what I like, I've worked with you before, Matt, for clients is, hey, should we buy an investment property? I get to run my side of it and say, hey, this is what it looks like. We then go back to you and say, hey, does this work? 9 times out of 10, we're saying no. It doesn't make sense to go buy an investment property. But at least we're looking at those options. But I will never use a higher rent. Yes, maybe someone's getting $3,000 for a house. We got to go look at what it was in 2020, 2019. We cannot use these inflated numbers.
Yes, I would agree. I think the next, again, we'll see what happens in the next 3 to 5 years. There is certainly a supply shortage, and we all know that. So once that supply comes online, what if they shore up all that vacancy, or that need, sorry. And now we're at a point where there's higher vacancy rates. There's more competition for that rent dollar. There's better properties. There's brand new properties. And you're seeing that just even, locally. I think that's a real opportunity, to at least, look at what's the downside here. And I'm usually a pretty optimistic guy. So the upside is that it's long term and you'll manage your way through it. But in the short term, these are the things that may come up in Canadian real estate.
Yeah, and of course, it's going to depend on the age of the client. Like someone that is 30 is going to be a lot different than someone that's 50. And that's where I find, based on the stats in Canada, it's 50 to 60 right now are the most people that are buying. And that's because they might be downsizing, but it's really sitting with them and saying, yes, you heard back in the day that investment properties were good, but is that actually going to benefit you today?
That's a very good point. What worked in the past doesn't always work in the future. But sometimes it rhymes.
Yeah, we talked about this in a few episodes ago, that the average first-time buyer is 36 years old, which makes me sad because when Alex and I first bought, I was in my mid-20s, and man, both of us probably, I'm speaking for myself, but we scratched and clawed to get in, had my parents help us out, put 5% down, have them co-sign. I'm like, you got to do what you got to do. The fact is that age has increased by 10 years is, not to put it politically, but the last 10 years has not been good. Like how things have gone has trended.
Yeah, I would agree with that. And I was in the same boat. I think we were 21 when we got our first place, and it did seem easier. I think part of it was prices of real estate, and I think what has happened is the wage gap is a huge factor in this. So affordability is the crisis, as they call it. It's because the wages haven't moved lockstep with the price of real estate. And when you have building costs continually going up, that's where we are, and that's why we have the issues that we're facing today.
Yeah, that's where, same. I got my first place at 20, and it was easier. Like I was self-employed as a commercial diver. It was very easy. The banks didn't want to lend to me because they said, Alex, you're too young. So I had to go through a mortgage broker myself, which brought me into this career, but it was a lot easier for me. I just sent in, hey, this is my tax return. Here you go. Now, when we talk to someone that's self-employed, all right, I need to see the last 3 years history of all your tax reforms. I need to see your bank statements. It's harder to qualify for one. And yeah, the income levels just have not sustained. Someone that made 10 years ago, $25, maybe they're making $26 an hour now. Like it's significantly different.
Yeah, another thing that, I mean, Alex, you'd mentioned about the average age is 36. I still think it's obviously it's lower, but over half of those new home buyers are funded by their parents in these major cities.
Yeah.
And if we look at it as across Canada, it's about a third. So that's probably, I think that's a trend that will continue. I'm curious as to other trends that happen in other, we'll call them quote unquote hot real estate markets, or at least expensive real estate markets, where there's more generational homes, there's more generational lending. I don't think it's really made it into the Canadian landscape yet. But I think that might be on the horizon.
I totally agree with you, because just in my business, I'd say 75% of my first-time buyers have some sort of help from family, especially living in Greater Vancouver. And for folks listening, the GTA, home prices are crazy. And I was even talking to my barber this morning about it. Like,
wow, yeah,
how can a 25 or 30-year-old put down 20% on a $500,000 shoebox in the sky? I don't care how much money you make. How can anybody save $100,000? That's not possible. So what ends up happening is money from family to help out the kids. So you're right. It's almost creating a sort of like aristocracy of the haves and the haves not, where not every family is like person or couple is blessed with family help, and it's widening the gap.
So true. Yeah, I've seen countless examples in the last 6 months of my clients helping out their kids or their grandkids.
Yep.
And in one case, they didn't qualify for a mortgage, and so the grandparents took out, private mortgage, and did it that way, just to at least get some payments so they can kind of get comfortable with that. But eventually, that money's going to the next generation, anyways, which is great, and I think that's part of. Part of just transitioning wealth. There's a massive wealth transfer that is happening in Canada, North America, all the baby boomers, right? And this is a way to at least get, some certainty, put a roof over your child's head, and help out.
And I think it's like from what like everyone, their parents might be leaving them something. My parents have very said, "Hey, Alex, you're not getting anything," which I'm fine with. But it's if you're planning on leaving an inheritance, like I always tell people, like why are we waiting till you actually pass away? Like why not do it while you're still alive and get to see your family enjoy it? Like that's where back in the day that was not the thing. Where I think that's becoming the norm, which I think it's really exciting for parents to know that, hey, I get to see my kids, and maybe they can buy a house in that town now, where before they were going to have to move to Alberta.
Yeah. Generationally, it is such a stark difference from my clients that are, 80, 90, and the last 10 years, kind of, you've really seen that shift where they really want to see them do something with it. But it's always this adage that I always tell my clients when they're about to gift is give them enough so they do something with it. Don't give them too much so they do nothing with it.
Yeah.
Exactly. Like touching on that too, right. Like I'm sure you're speaking to a lot of your elderly clients, older clients who are wanting to gift money to their children
Correct.
or grandchildren.
Yes.
Do you help them also assess too, like, yes, you can give this, but you have to make sure that you are not going to be suffering because of it. Like that you can withhold this kind of loss to your portfolio that you don't have to still have a mortgage while being retired.
Absolutely. And I think that is part of the planning process. And hey, if you do want to help out your kids at this level, just recognize what are the potential downsides to your own plan. And sometimes it might be lower income. Most of the cases, there's no effect at all. And it's just because you're going to leave all this money. You're not going to spend it. So why not give it now? Why not empower your children to do something with it? And at least, pass that on now versus later. And that later part could cost them even more, could cost the family more in terms of tax, could cost the There's probate in BC, and that's another cost that doesn't need to be bared at final death.
Yeah, and that's where I know like you step in a lot that way, helping clients, Matt, is helping plan that way. Because I know some people might think that they're set up and be like, oh yeah, I'm just going to give my family this money and give them my house. But they've actually not structured it, and now they owe 100,000. And what if they actually don't even have that money? And that's where people lose houses that some people actually want to stay in the family.
That's right. And you're seeing it now because, housing prices have doubled or tripled in certain regions. That has been a huge difference where we were even 10 or 15 years ago in our planning. Housing was still, your typical house cost was maybe 350,000.
Yep.
Now it's over 1 million. And when you're looking at that from a plan perspective, there's going to be a tax if you've accumulated assets over time. And so where's that tax going to come from? Is it going to come from now you have to take out a mortgage? Are you going to have to liquidate some assets? Or are you going to have to sell that home? And that's a stark reality that I think some families are going to be faced with.
Talking about the equity inside of homes, we've obviously seen in the news here lately, like the governments are talking about, they've been doing research of like, how do they tap into that like $1 trillion of equity that people have in your homes? And I mean, tell me like a little bit your thoughts on that. And what could that do to people actually if the government started taxing us on our equity?
I sure hope not. That's my first statement on that. Yeah. And I think, obviously it's been widely covered because real estate is so loved here. The government knows how much value is now there. And so, we need to find ways, in our current landscape, how to pay our future tax bills.
Yeah.
So they are exploring those ways. Now, what people could do about that, I think it's going to be, if you start to see that happen, you will see a lot of real estate get sold off.
Totally.
I would hope, and when that came out about a year and a half ago, when we first kind of really started seeing that as a potential in a budget, it was talked that there would be grandfathering. So I'd really hope that there'd be a grandfathered scenario or there'd be a cap. And I think that would likely cover a majority of Canadians. But at the same time, there's been a number of policies that have been put in place, like, unrented homes and vacant homes, that I think are also playing into whether people sell their real estate early or not.
And what about there, Matt? What about like the capital gains that came in, obviously, like last year from and everything there? I know talking to a few people kind of like really freaked out and started selling places because they were so worried about it. Obviously, that is now not happening.
Mm-hmm. That was a very strange time. The amount of, I guess now looking back, I feel really bad for the amount of clients, their professional advisors, myself included, their accountants, the lawyers that did all of this planning work in order to do some of those things, and then to have it be removed was disappointing.
Yeah.
Now I didn't like it first, but that's the cards that were dealt with. So we did have some clients that on paper had to do some tax planning and do a number of things before that deadline in June. And it was a stark reality. Unfortunately, that's when tax can really make a decision on your investments. But it's not the only decision. And I think that's why I always kind of go, there's two decisions when you're making an investment, whether it's in real estate, stocks, anything. One, is it a good investment? Two, what's the tax implications? And if those are both not great, then you make those decisions from there.
Yeah, I was going to touch on. I don't think whatever government will ever tax the. They were researching it, but taxing equity, I can see society like there'd be a mass uproar and mass rioting, and yeah, it'd be a downfall to society. Like when we're looking at yeah.
It's hard. I mean, you could see it 50-50. I mean, the boomers, they're going to freak out about it, but the younger class, they might be shouting at it because I mean, we know for people to we have to bring home prices down. And I mean, the government is not going to talk about, hey, we're going to bring home prices down. But like Matt said there, if they brought this in and a mass like sale of homes started happening, that would bring prices down. And that's where it's like, it's such a weird thing because some people are going to cheer for it and other people are going to be very upset.
I would say most would be upset.
Anyone that owns a home is going to be very upset.
Yes,
but that's where
right.
Me and Alex were talking on one podcast about like when you're a renter, you're like, hey, I hate landlords. I want to own my own home. And then obviously when you own a home, you're like, oh, well, I might want to rent this house now. And it's such a stark difference for each person. And it is. I know people get really upset of why can't I get a mortgage? I pay $3,500 a month in rent and everything. And they don't understand like the other costs. Like it's great to say, hey, yes, your mortgage would be $3,000, but what if the roof breaks on this? You need to be able to prove that you can come up with $10,000. And that's why, yes, you can rent and use 90% of your income. The landlord doesn't care, but the bank is not going to lend something like that. That is way too risky for them.
It's very true. It's very true. I find that the trend has been, if we look at like those long-term trends, it's been trying to get that entry level price, and the box has gotten smaller, right? Yep. So the living style has gotten smaller. And so some of that's also, we talked a little bit about entitlement. I think owning a home in the past has almost been like a right of Canadians. And now I think owning a vehicle is also a luxury and a premium. And I think owning a home is too now. And so we're starting to see that, like, is it going to be shared spaces? It's obviously getting smaller. Like you look at the land sizes now are also, cut in half, let alone the actual size of living is there too. So, that's one part. And then the other part is just, maybe not everybody has to live in Vancouver, GTA, those major cities. And some of that trend is like the gig economy and finding places that are pretty nice, like Vancouver Island, or like just kind of making your lifestyle more about your living situation if you can do it. And that's the key, if you can do it.
And that's where I find some people aren't willing to do the hard things. Like it is like there's other people out there like, hey, you have issues, like you can't move from where you are. But like I remember growing up, nine of the people that work, like if you're on the island and where Matt and I live, either you were a doctor, a lawyer, or you worked in camp, a fisherman, or you worked up in the forest. Like that's how it was. Or people went to Alberta, they'd go there for 5-6 years, work their ass off, and then come back here. I find people aren't willing to do that stuff now. They're like, hey, I want to live in town. I want to be paid very well, and I should be able to buy a house.
That's right. Yeah, it's a very very, very big difference. I'm born in the 80s, but I think if you look back in history, you saw a significant move of Canadians across provinces to find jobs, to find homes, to find affordable places to live. And that was on the backs of a much higher than these days, but relatively big spike in interest rates. And that forced people to do a number of things. There was a recession during that time too. And so through, we'll say through, crises and situations like that, people can be forced to do things. And more recent, COVID, had a big effect on people in terms of, level of technology and adaptability and those things. And it also then morphed into real estate. But it was very short-lived. Very short-lived.
Real estate, and you're probably buying one day and it's worth $100,000 more.
Yeah. Yeah. So we saw that interest rate move significantly down, and that created the optimism and confidence that we can buy again.
I wanted to touch on another proposed legislation or probably a campaign promise from the Conservatives.
Yeah.
Now, Pierre Poilievre is proposing a reinvestment tax cut, or essentially it's deferring taxes on capital gains, where you sell something and you reinvest it back into Canada. What are your thoughts on that? And do you like it?
I love it. I think it's a great idea. The U.S. does this as well, and specifically not just selling real estate, but that's one, selling a business, investments that are in Canada. I think those are great things. What would that do? That would likely have a positive effect, generally speaking. But I also think that would allow more people to make decisions that are not just based on tax and the implications of that tax. Eventually, that tax will be paid over our lifetimes. And so I think that hinders business investment by not doing it, because people are so rooted in tax. We pay a very high level of tax in our country. So I think it's a great thing. Unfortunately, political promises, left, right, and center. We'll wait and see what actually happens through that. But I think it's a great policy.
Yeah, I think it could even help stimulate like the housing supply, because builders would be more willing to all right, let's buy a place, we're going to sell it, we're going to flip it. And like it actually could have people, and what they do in the States, buying places that are very like not well kept. That's why people buy them. They're going to make the profit. They're going to move it to the next property. Or right now, you could do it, but then you're like, okay, I spent $100,000 and then I just paid $30,000 in tax. Like, was this actually worth my time and money?
That's so true. And even the business owner, the small business owner that is been holding on, right? And kind of in their, late stage of their career, that can also have a nice effect in terms of, hey, I'm ready to pass the business on to my children. I'm ready to pass the business on to a third party, and then I can go do something else. And that's another thing where you're seeing an aging population of business owners that are needing a succession, and that is one of the backbones of.
Well, yeah. So let's circle it back to obviously like the tariffs and business investments. I mean, what you're talking about there, Matt, about allowing business owners to be able to sell and have that plan going forward. But like, what do you think it's going to happen with businesses with these tariffs? How is that going to affect us?
Yeah, I think there's a lot of uncertainty right now. And so you have uncertainty politically, globally. You have investor confidence at alarmingly low rates. And then you also have the business investment or reinvestment confidence also at low rates because of all of that uncertainty. What does that do? I think that does delay or pause a number of things when we look at a business. They go, do I need to hire? Do I need to reinvest in my business? Do I need to go into different markets? I'd be very, very cautious on those scenarios right now. Now, having said that, when you look at any major downturn, recession, there are so many companies that have been built out of that.
Yep.
And I think that's also important to know that there are people who are looking for opportunities, and through challenge is opportunity. So I think we still want to be looking out 12, 36, 60 months from now and go, during that time, that was probably very difficult. But here's the certain number of businesses that did survive very well and thrived.
Totally.
And so that's my kind of optimistic look in the uncertainty. It's going to be uncertain until we have a clear indication of where policy is heading. Unfortunately, it's been on again, off again, and any of that is going to delay any sharp business person to go, I'm not going to risk my capital. Yep. And we've seen just as an example, I got a report today from Goldman Sachs, is that businesses in the US have raised their cash levels by 10%, which means that they have not deployed that capital. Yeah. And that's a big number.
Yeah, and that's the one thing I want to bring up is obviously like for yourself there, Matt, and your office. And like when people are creating a team, we know there's a lot of investment companies out there now that people can invest themselves. I'll even say, hey, I used to do that myself because I had the time and I was willing to do it. But the problem with that is it's just me. It's just myself sitting there saying,
Yeah.
all right, I'm going to do this today. But is that actually what's going to be beneficial? And I really think people need to sit and not just think about, yes, maybe I'm losing a percent here or there, but what is the actual gain? And that's where I know myself, I struggled with a bit, but realizing like you need a team around you so that you know, like, hey, is this the best option? Hey, you know what? This is what these guys are doing over here right now. This is a recession, and hey, they're making a lot of money right now. And if you didn't have that support, you're not going to know about that.
Yeah, it's a very good point. I mean, clients don't pay us to. I don't think clients pay us for when markets are good. They pay us for when markets are not so good. They pay us to look at their overall plan. Where I do feel that a lot of do-it-yourself investors just focus solely on the investments and the performance thereof. And the last couple of years are a great example of that. And we're in a digital world. And so you can buy the US market for like, I don't know, 0.04%.
Yeah.
And that's been the Instagram advice that you see all the time. Just buy the S&P 500.
Yeah.
I'm not saying that that is advice. And that's worked. Now, when you look at scenarios like this, you have both of your hands on the wheel, and we've just run into a bit of a stop. And so some clients can't, or some do-it-yourself investors can't handle that roadblock or that speed bump, and they make the decisions that cost them dearly. And so, JP Morgan is a great example. They take the average 10-year investor returns, and the S&P 500 is averaged, we'll just use round figures, 10% per year.
Yep.
The average investor is 3.4%.
That's what theirs is.
And that's a decade return that has been going on for years.
Yep.
Why is that? Because they make the bad decisions at the worst times.
Yep.
So what I would always say is having a second set of eyes, even if you do still have some of your hands on the wheel, just recognizing what the opportunities are, recognizing what the threats are, looking at your overall plan, because it's not just the investments. And again, the other part that I would just say with some of the maybe differences that we would provide is, you're going to build your plan first, and then we're going to implement those certain steps. But there's certain investments that are just not accessible in the do-it-yourself market. There's cheap ones for sure, and those are great opportunities to kind of build a disciplined investment strategy. Just start getting invested and start understanding how to invest. And for our younger up and coming investors, I think that's a great way to build your wealth. There's a point in time where we need to protect it. And that's where we come in.
Yeah, that's why I had a question here for you, Matt. Also, like, we know obviously when people have money, it's a lot easier to make that money. But it's the people that are 20, 25 that we know, hey, they can't even buy a house yet. They get they get stuck. They're like, I'm never going to get ahead. And I thought I want to see if you had just like some suggestions, like how do people get prepared for that? Like what's the best way that someone should start getting set up?
Yeah, I think it's like, how did I learn? I learned from my parents, and I think it's just being vulnerable and open to advice, leaning on experts, leaning on people that have done it before. Looking at those things can be encouraging to kind of go like, where do I start? And so what I would just say with anyone is, and I'm going to steal this quote from, a great Canadian guy, David Chilton, you got to pay yourself first. I feel we probably all read The Wealthy Barber.
Yep.
That was one of the first kind of financial books that I had read. I think it's great material, and it's just about starting small. And I kind of talk to like my younger clients or my clients' kids, that it doesn't have to be this, like, we don't have to have $250,000 right away.
Yep.
Like, we just have to start really small. And if we turn it into a regular contribution that we're building our savings over time is the biggest factor. And that time turns into larger numbers. We can pay our cell phone bill, no problem. We can put money or put gas in our car. We have to pay for insurance. And if we get in that same habit with our own savings and investments, it becomes second nature. You don't even notice it. And then you look up 2 or 3 years later, you've amassed all of this money. And Canada has a number of different great savings vehicles to kind of get us started. And I mean, one's the first time home savings account.
Yeah.
I think that's a great first step. The tax-free savings account's another one to kind of complement the two. And that's what we're kind of suggesting. Just start small, like $25 a month. Like start as small as that.
Yeah.
And it starts to really, really grow from there.
I think social media is just it's so in people's face, and they're like, "Hey, I took this $100 and I became a millionaire." And so like that's what everyone is trying to now emulate. They say, "Oh, I just got to do this. I'm gonna trade options online, and I'm gonna make all that money." Where it's like a lot of the people that have amassed their wealth, it's really not been in a 5-year time span. It's been, hey, it's taken them 30 years to get to where they are. Everyone just sees the today though.
That's right. And I mean, the flavor of the year or years has been cryptocurrency.
Yep.
And there's been countless examples of losses. Options has been one for many, many, many years. If you're not educated and not know about that particular area of investment, it can be catastrophic. And that's never going to help somebody who's a new young investor to lose their money right away. That might even get them to never invest again.
Yeah.
So I think it's keep it simple, understand what you're doing, and if you don't, that's where the experts come in, right? I'm not a mortgage professional. You two are. I have one doctor. I have one lawyer. I have one accountant because I don't do those things.
Yeah.
I take my car into the mechanic. Like I'm not going to be fixing my car. I'm leaning on that professional to do those things. And that's what I would suggest.
Yeah.
Yeah. One final thing before we conclude this, especially in this time of uncertainty, I tell my clients, prices are down. That means everything's on discount. I don't know if you feel the same way in the investment side. We know it'll eventually come back up. So if you have the means, this is almost the time to double down, and this is the buying opportunity. We all talk about buying low, selling high, but we don't understand the environment in the buying low part is most likely confidence is low. People don't want to buy. That's why prices are low. You kind of have to fight the herd mentality, the human psychology, and go against the grain. I'm like, and is that what you would say to your clients as well?
Yeah, and in my world, it is funny because we always kind of bring it up in these times. The stock market is the only market, maybe not the only market, but it's one of the only markets that when things are on sale, nobody buys.
Yeah.
Right. So I tell it to a client, if you walked in the grocery store and something's 20% off and you regularly buy it, why aren't you buying it?
Yeah.
They go, well, no, I would buy it. Okay. Well, this is the opportunity that presents itself.
Yeah.
And then I think we have been in a time, we have short-term memory spans as investors. And I think the last 2 years, coming off of the interest rate spike and the inflation issues that happened around the world, we kind of forgot about this thing called risk and volatility. And unfortunately, in order to reward yourself with growth and gains, you have to go through times like these. And I pull up a video every once in a while just to remind myself that once a year, the markets pull back 10 to 14%. Twice a year, approximately 20%. Every 5 years, 5 to 10 years, 30%. right? And if we can keep that mindset that we know that those things are coming, we can prepare. And if we don't, and we're blind to that, then, shame on us for not researching and understanding what's happened in the past. So there's always opportunities to buy. There's always times where things are on sale. And that's when I actually kind of weirdly enough get excited, because I'm a buyer of discounted assets.
Yeah, I tell my clients money is made on the buy, not the sell. The same is happening in real estate. Prices have come down 10, 15% from the peak, and no one's buying because market sentiment is bad. Consumer confidence is at its all-time low. I'm like, this is the opportunity to buy. But right, we're kind of like, I'm preaching to the choir, but I guess that's the message that for long term. Alex, do you have any closing questions or thoughts?
No, I think it was awesome, Matt. Really appreciate you coming on here today and just helping us kind of go over everything. It's much appreciated there.
Matt, thanks again for joining us.
Thank you for having me. Really appreciate it.
Folks, thanks for tuning in. We'll see you next time.
Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.